Right now, right now. Right now, 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 right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today, so we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since it's been out there. The government has been Hey guys, what's going on? Jeb here, and in today's video, we're going to be talking about what will be causing the next Bitcoin bull market. We're going to be looking at the CPI, we're going to be looking at the effective federal funds rate, we're going to talk a little bit about FedNow, we're going to talk about the halving, and we're also going to talk about perhaps my favorite, the coup de grace, the M2 money supply. I saw an interesting article this morning on M2 money supply. If you don't know what M2 money is, there are a few different types of money that the Federal Reserve classifies and most central banks classify. There is M1, M2, and M3. The M1 money supply is basically cash and cash equivalents. So, for example, a $100 bill that I have in my wallet or $100,000 that I have in my checking account or whatever number it is, that is money that can instantly be spent. M2 is essentially money and things that can be very easily grabbed and put into money. So you're talking about M1 plus things such as CD, certificate of deposits, and other money such as retirement accounts under $100,000, different assets such as that are essentially money or could be converted into money that could be spent at say a grocery store or to buy a piece of property almost instantaneously. The M2 money supply growth has been very closely correlated with every bull market in the history of Bitcoin, and I think it's a component of this equation about how we go into a bull market that is something that we absolutely cannot ignore. We have to look at economics, we have to look at geopolitics, we have to look at finance, we have to look at the stock market, and we have to look at the dollar and the other currencies around the world to really understand what Bitcoin is going to do, why Bitcoin has done what it's going to do, and where Bitcoin is going to go from here. This will be the last day that we're in our home. If you guys don't know, we have had quite the quagmire from our vacation. First of all, we went on vacation 3 days early because we were fleeing a hurricane, which was originally going to go straight over our house as a Cat 4. Ended up veering pretty far west and devastated a town that I used to live in called Cedar Key. If you guys are familiar with Cedar Key, it got absolutely wiped out down there. Very sad stuff. But so we ended up having to leave at 8 p.m. at night with 2 children, drive through the night. It was a mess. And so that kind of threw everything off, made things a little bit more difficult. Then at the same time, we got bed bugs in our hotel. We had a nice, cushy hotel. Like I cannot stress enough. This was a nice hotel. Nice hotel. And nevertheless, that ended up happening. It was a mess. And so now we're trying to figure out how to deal with that. I think we've pretty much got a solution. So I believe that we'll be back in studio on Monday. But for now, as you guys have seen, another famous YouTuber in the cryptocurrency space say, information is more important than production value. Tell me where you saw somebody say that. I'll give you a brownie point in chat if you know what video I'm referring to there. If you have seen that video that I'm referring to, quite an interesting one. Alex Nibo was first saying good morning. Good morning to you as well, Alex Nibo. I thank you guys for your patience with the production value. We will be back on set on Monday. Sean O'Brien said, hey, hey. Sir Stonewall said, morning, everyone. Good morning. Joe Bollier in chat said, good morning, Jeb. Justin said, good evening. Christopher said, good morning, everyone. Especially you, Jeb. Consistent and disciplined. Grateful for you, brother. Christopher, I am going for that. I believe that I can do better, and I really appreciate the support that you've given me on that. It's good to hear you say that. AJ Knight said, hope everyone has a wonderful day filled with many blessings. Amen. Sir Stonewall said, excited to hear today's show, Jeb. Thank you. Dan Nolan said, right now. Right now, right now. Robert Kehoe in chat said, good morning, Jeb. God bless. Sir Stonewall said, Jeb. BNB TC Crypto Alerts in chat. Crypto Mini Bike in chat. Grand Roofing Incorporated in chat. Ninja Glock in chat said, hey, good morning. Good morning to you as well. Crypto Mini Bike in chat again. Jason Hahn said, good morning, crew. Justin Shaw said, hey. Freddie said, ew, bedbugs. It's disgusting. It absolutely sucks. Sir Stonewall said, Ben Armstrong. Adam Rourke said, Ben Armstrong video. Sir Stonewall said, his new channel. Eric said, that's the free Ben vid. Yes. So, I talked quite a bit about what was going on with Ben and the BitBoy crowd last week. Not going to talk about it much more, especially anything on the personal side. You guys can go and find that stuff out on your own. If it's public, if it's not public, don't bother because it's their personal information. If it's been made public, unfortunately, it is public. What I will say is that the drama continues, and I saw a tweet on X, formerly Twitter, from Ben saying, I believe, essentially that they were going to have one more meeting and then attorneys were going to start getting involved. This is essentially what we knew was going to happen. So it's sad, but that's pretty much all I'm going to give you right now. It looks like that there is going to be some kind of legal battle. All right. Cool. Let's go ahead and talk about crypto, though. Good evening to you guys. Good morning to you guys. Hope you're all well. All right, so as we know, a bull market is likely to be coming. Many people are predicting that bull market will be starting in the next 8 to 10 months. That is a fact that many people have kind of taken for granted. Many people are just assuming, okay, a bull market is going to happen. It's going to happen right around the time that we see the CPI data being, sorry, not the CPI data being released. I had that up because I was going to talk about that later. When we see the halving taking place. And I think that we are going to see a bull market happen around that time, but I think it's going to be for more reasons than just the halving. I think there's a confluence of different technical and fundamental factors that are coming into play that will lead us into a bull market in the first half and especially almost certainly into next year. I'm excited to talk about that today. So, bull market. Every 4 years, Bitcoin goes through a bull market cycle based on the halving. If you look at the history of Bitcoin, it is cyclical. You guys probably already know this, but for those of you in the back or for those of you who may be new to cryptocurrency, you can see here on the Brave New Coin Liquid Index for Bitcoin, there's a bull market roughly every 4 years. There was one that started here in 2012, another started in 2015 and 16, another started in 2020 and 2021. Those have been the 3 bull markets of Bitcoin's past. Now the question becomes, is Bitcoin going to experience a 4th? Let's just go ahead and talk about something that I find a little bit interesting that is part of the counter argument. This is something that the Federal Reserve is releasing relatively soon that many people are very, very concerned about, and that would be FedNow. Now, I'm going to explain FedNow more in other videos, and I'm going to bring more content on that in other videos, but essentially, there is a ongoing arms race, it's called capitalism, in the fintech space to bring down transaction costs. If you use a credit card, oftentimes it's a flat fee, it's a 2.9% transaction fee. Many times the merchant will just eat that, and so that's why you get people charging less if you pay in cash than if you pay with a credit card or a debit card. Well, here's the deal. The Federal Reserve is about to come in and break up the entire competition because there are so many companies, PayPal, Visa, MasterCard, a lot of people using Bitcoin that are competing to bring down those transaction costs, that are competing to be able to create a solution that is less expensive, because of course that's how capitalism works. If somebody can get you the same service for cheaper, then you're going to buy it. So if you're Visa, if you're MasterCard, if you're Square, if you're Circle, if you're any of these companies, if you're PayPal, if you're X in the future, then you're trying to bring down those transaction costs and make that remittance much, much quicker. So here's the thing. FedNow is attempting to essentially come in, subsidized by the government, create that service for free with no transaction costs whatsoever, or nearly. FedNow is an instant payment service and has been developed by the Federal Reserve, and it will be launching. It actually has technically already launched. So the question now becomes: is this a service that can do what that's been proposed? Is this a service that can do what it says it can do? And is this a service that is actually going to have an impact on the Bitcoin and the cryptocurrency market? Well, if you think about it, The two biggest use cases and value props for Bitcoin have been this. Bitcoin is the first non-inflationary investment hedge that we have in the history of the world. People would maybe give me pushback on that and say, well, Jeb, what about gold? Gold has been inflated at 2% a year for hundreds of years. So if you're trying to get away from 2% inflation and you're investing in gold, you're not getting away from 2% inflation because gold is being inflated at 2%. Why? Because more gold is being mined. It's just not something that you can use to get away from inflation the way that many people think. And by the way, if you're enjoying today's stream and today's content, make sure to hit that like button and subscribe to the channel. The fact of the matter is that gold is not an inflation hedge. Bitcoin is. Bitcoin is not inflating at 2% a year. It's actually already inflating at less than that. And considering the amount of Bitcoin that's being taken out of circulation just by simply being lost, we can very confidently assume, there does need to be research and data done on this, but we can very, very confidently assume that Bitcoin is now a non-inflationary asset investment vehicle, period. It's not inflating at all, even with the issuance of new cryptocurrency, especially after the halving. So that's one value proposition, and that doesn't go anywhere in light of FedNow. Now, the other value proposition that does come under fire from FedNow is the fact that Bitcoin also receives a huge portion of its underlying intrinsic value from the idea that it is superconducting. This idea of superconductivity in finance is one that I've explored before, and I explored on our interview with Michael Saylor. We defined Bitcoin as the first thermodynamically sound superconducting cryptocurrency in the history of mankind. Essentially thermodynamically sound, meaning that it's not losing value over time to the ether through the form of inflation. Superconducting essentially meaning that it is able to send transactions in the grand scheme of things compared to the banking system nearly instantaneously. When you're thinking of bank transfers taking 3 to 5 days to clear, 60 minutes to get 6 confirmations is not that long, especially if you're dealing with large transactions. You don't care if it takes 60 minutes. If you're buying a cup of coffee, then there are ways that you can work around that with Lightning Network. But if you're trying to buy a $100 million real estate deal, then you don't care if it takes an hour to clear. It doesn't matter. It makes no difference whatsoever. The fees on Bitcoin are exceptionally low. This is where FedNow does give Bitcoin some competition, because Bitcoin had been an avenue to make large transactions that the traditional banking system was not able to much cheaper, because they would often charge a flat rate that's large or a percentage fee that is even larger. Bitcoin did neither. It charges a flat fee on the transaction cost based on how much space it takes up in the block. And if you're sending $1 billion or if you're sending $1, it takes up the same amount of space in the block, so it scales perfectly. Not the most efficient thing for small transactions, exceptionally efficient for large scale transactions, which will bring in large money players, especially large money players that have been disenfranchised by the system. That's why you're seeing actors like Iran, you're seeing actors like Russia using Bitcoin, and you're likely to see more that have been kicked out of the world order, that have become global pariahs using Bitcoin. That's not to say that Bitcoin is an index fund for money laundering, as it has been called before, but it is to say that Bitcoin does meet some use cases that otherwise have not been met. So does FedNow pose a real threat to Bitcoin? It does provide some competition in some way, but I think the main purpose of Bitcoin is not its use case as a medium of exchange. It is as its use case as a hedge against the very currency that FedNow will be running with, which will be a central bank digital currency, essentially a CBDC that is pegged 1-to-1 to the United States dollar. Very similar to a stablecoin, except it is set up by the United States government. So let's talk a little bit about some of the other components. While we're talking about the Federal Reserve, we also need to talk about the money supply. I have an article over here that I was reading on this that I think is useful. It has a chart here that I want to show you. This is the aggregate M2 money supply of the 4 largest central banks. You're talking the Federal Reserve, the European Central Bank, the Bank of Japan, and the People's what am I trying to say? The People's Bank of China. That's what I'm trying to say. So this is the M2 money supply growth per year. Actually, it's broken down per month from those 4 largest central banks cumulatively. You guys don't know, those are the 4 largest central banks because the United States makes up a quarter of global GDP, about $25 to $30 trillion. The People's Bank of China represents about 20% of GDP. The ECB represents about another 20% of GDP. Japan represents in the high teens. So we're talking, 70 to 80% of global money supply being covered in this chart. You can see this goes back to 2011, and every time we were seeing considerable growth in the money supply, we also saw considerable growth in the Bitcoin market. Something to keep in mind is that Bitcoin, because it's easy to look at this chart and say, oh, well, Bitcoin's only growing because the global money supply is growing, theoretically. But keep in mind, this M2 growth here is based on a linear scale. This United States dollar growth, this Bitcoin growth is based on a log scale. So when the money supply grows a little bit, Bitcoin grows a lot, grows a whole lot. So when you see the M2 money supply growing, and this is an annual, by the way, this is annualized except it's monthly. This is kind of like CPI. This is not saying it grew 8% one month, 7% the next month, 6% the next month, and then it's up 30% in a quarter. That's not what it's saying. This is the annualized, growth of those four major central banks' money supplies that they track, the fiat currencies that they track. So you're looking at the United States dollar, the euro, the Japanese and the Chinese currencies. So as you can see, there was a huge M2 money supply moving through the pandemic recession, led to a massive rally on Bitcoin. The money supply has actually been shrinking lately, and that caused a huge drain on the United States on Bitcoin. And that's no surprise, because we were seeing many of the central banks tighten exceptionally because they were trying to pull back on the massive growth in the money supply that they used to fight off the pandemic. We've been talking about this for 3 years, guys, and it's still relevant as ever. When the pandemic happened, the governments of the world shut down their countries, and when they did that, they crashed the economy. And without massive government intervention, we would be in the greatest of Great Depressions right now. They destroyed the economy. You shut down business? You shut down capitalism for 3 months? You destroy an economy like that. The gross domestic product of the United States dropped by a third in a quarter. This was the fastest drop in GDP in the history of the United States by like an order of magnitude. This has never happened before. And Lord willing, it will never happen again. Whether we should have shut down or not is a political conversation and an ethical conversation that I'm not too interested in having right now. Maybe it should have happened. Maybe it shouldn't have happened. But what I can tell you is from capitalism's standpoint of view, it was an apocalypse for small business especially. And now we're seeing the effects on large business. So when that occurred, the only way that the Fed could stop this entire ship from sinking, the only way the other central banks could stop the entire ship from sinking, because China shut down things a lot harder than we did, the way that they did that is they went on a gigantic money printing spree, and they poured so much money into the economy that it didn't matter. Think about it like this. You have personal finances. You are your own little company. I'm my own little company with our own finances. Imagine for a minute if you stop going to work and you double your expenses at the same time. You're on a fast track to going broke. You're taking a quick walk down a short pier, right? Essentially what the Fed did is they not counterfeited because they're the ones that can do it, right? They created money out of thin air to fill the gap. It's a little bit like this. Let's say you lose your job and you call your mom and dad and they pay all your bills for 6 months. But you still lost out on 6 months of job experience. You still missed out on 6 months of income. And now your parents are a little bit less wealthy than they were because they had to support themselves and you. It causes a ripple effect because for the rest of your life, you're not getting those 6 months of job experience back. You're not getting that 6 months of income back if you're your parents. And you're having to fight a lot harder to catch back up. And so that's what we're doing as a world right now. We're fighting harder to catch back up. And part of the way that the governments of the world have been doing that has been by tightening the money supply. You go to the USC BBS, United States Central Bank balance sheet, and you can see that we've been dropping the balance sheet quite aggressively. We've dropped $1 trillion nearly off of the treasuries and mortgage-backed securities that the United States Federal Reserve purchased during the 2020 pandemic. They're letting that roll off. Over the course of many years, they're going to let that roll off. We have a video on that. You can go back on the channel and watch that. When that finishes, as that continues, this is a shrinking, this has to do with the shrinking of the money supply. It definitely has to do with the slowing of the growth of the money supply. But there is a trend here that's interesting. As the economy has started to stabilize, as we see things like interest rates coming back under control, again, they're at 3.2%. If you watch this channel, I'm essentially guaranteeing you that they're going to go up next month and the month after. It's very difficult to give a guarantee like that, but with everything that we're seeing, we already have most of the data. This number is almost certainly going to go up. It might go down, but I'm looking at 3.5 to 3.6% on a major category on all items next month. Nevertheless, being sub 4% at least, that's at least half of the way to the Fed's target. The Federal Reserve is getting a lot more interested in allowing the money printer to turn back on again to hit their target 2% inflation. They're okay with the idea of printing a little bit more money to increase the M2 money supply. Because the idea is, as you have more people in the world, as you have businesses that are larger in the world, as you have more resources that have been extracted and are being utilized in the world, as you have a larger economy, the theory goes that you need more money. If you've got $100 and you have to split that between 100 people, then everybody gets $1, and then you just transact, and a ear of corn costs a cent, and a house costs 50 cents, and you're able to make that work. But if you have 100,000 people and there's only $100 in the economy, then all of a sudden, there are people that cannot even afford to have a penny because of the amount of deflation. And so to make an economy work, you do have to have a certain critical mass of currency, that the currency does not become so devalued that it's not subdividable down into divisible units, that it's able to be actually utilized. And if you don't print any money at all, you actually turn into deflation, which is a spiral, which leads to people not spending money. If you guys don't know how the economy works, the thing that drives GDP is spending. So if you don't have a little bit of money, if you don't at least strive to keep inflation at 0 or like 0.1%, then you incentivize people not to spend, and you go into a deflationary spiral where people don't spend money, and then the economy stagnates, and then you screw up your economic growth because you're actually looking at a deflationary currency being your driver. Again, that's the way the theory goes. Whether that plays out in practice or not is something that you can look back on history and you can make that decision for yourself, and it's something that we can think about from whether we're looking at things from a Keynesian or an Austrian economic point of view. Point being, the Fed realizes now that things are starting to stabilize a little bit on inflation, and a lot of this inflation is actually more healthy inflation. It's coming from the build-out of industry that's moving overseas from the absolute cataclysmic destruction of the petrochemical sector in Germany and in the rest of Europe right now. It is, wow. Industry in Europe is getting annihilated. The onshoring of manufacturing coming from China, and the build-out of industry that is working in cooperation with Mexican industry down near the Texas Triangle and the southwestern United States. A lot of the inflation, as well as of course, we can't forget the CHIPS Act, the inflation that's coming from the build-out that's being spurred on by the CHIPS Act, the inflation that's being spurred on by the infrastructure bill that we saw pass. All of these build-outs lead to some inflation. So the Fed's realizing, okay, some of this inflation is coming from things that are healthy. We're willing to start turning on the printer again. We're willing to start having the M2 money supply increase a little bit. Maybe not a lot, but a little bit. So all of that has to do with this chart. If the M2 money supply does indeed start to creep back up, and as you can see, it is, we're starting to see a similar thing from the People's Bank of China. They've pretty much always had more printing. They're okay with devaluing their currency, much more so than we are. They have more of a get-rich-quick mindset, and as you can see, that's not working out very well for them. Because with everything that's going on in China, especially with their CBDCs, they are seeing the complete and total annihilation of their lower and middle class, and their rich are only getting richer, but they're getting richer on a back of a system that is completely unsustainable. In short, China's screwed. Right. So, if you look at this chart, the 4 central banks are starting to increase the M2 money supply again. But where have we seen that happen before? We saw it happen here in 2019. We saw it happen here in late 2015, early 2016. We saw a massive amount of M2 growth back in 2011 and 2012. All three of these periods led to bull markets. And you can see the M2 was actually negative because, again, the Federal Reserve and the central banks of the world are trying to overcorrect from the damage that they did to the economy from all of the printing that took place because of the government's shutdown. It's not so much the Federal Reserve and the central bank's fault. It's really more so the government's faults for completely shutting down the economy. And then the Federal Reserve and the other central banks of the world had to do something, and the only tools that they really had at their disposal were inflationary mechanisms. So, again, you can blame the Fed, and the Fed's not guiltless, but it really actually comes down to the shutting down of various economies, especially how long and how hard those shutdowns were. So, if we look at the M2 money growth here, it dropped off a cliff correspond with the bear market. M2 money growth is something that leads to money in Bitcoin. And think about the principle behind this. If there's more money in the economy, and all of a sudden you're getting more money, right? You're getting more money. There's more money, right? You think about an economy from like the spirit of a nation point of view, like the spirit of the United States, the spirit of the the European Union, the spirit of Japan, the spirit of China, the spirit of these countries is given massive amounts of money. And what are they going to do with it? Well, they're going to spend it, and it's going to stimulate economic activity, and it could lead to short-term GDP growth at the expense of long-term inflation, which actually hurts the economic outlook over the 10-year view. But some people that get that money, part of the spirit of the nation, is going to think, I have more money, which means I can take more risks, which means I can invest more money in something that's more risky, such as Bitcoin, that's perceived as more risky. And so you see a massive rally on Bitcoin. But we're starting to see that happen again, and that's the exciting thing. We're seeing the effective federal funds rate plateauing pretty soon. We're seeing CPI probably staying under 4.5. It will probably go back up to 4, but it's not going to go up to 7 or 8. And you're seeing the M2 growth start to grow. These are early signs that the economy is positioning itself in such a way for Bitcoin to go into a bull market. Now, I haven't even talked about the halving yet. And part of the reason I haven't even talked about the halving yet is because the halving is a given. We basically expect that when the halving takes place, Bitcoin will go into a bull market. It's not always that simple. It has always happened. It's kind of like CME. It's kind of like the Bitcoin gaps over on the CME futures gaps for Bitcoin. It's basically always happened, but that doesn't guarantee it always will. I'm skeptical of a trend that has always done something because no trend is perfect, and eventually every trend will be broken. So honestly, when I see a trend that is 100% accurate throughout history, it actually makes me a little bit more skeptical. I'm much more interested in trends or patterns or technical indicators that are accurate 70 to 85% of the time, because that shows me that they're not just coincidentally accurate for some reason, but it shows me that there's actual staying power. There's actual predictive power there. The halving is a predictive tool that has been accurate 100% of the time. So it does give me a little bit of pause, like, wait a second. Is that actually what's going to end up happening? Are we going to see the halving take place and we're going to go into a bull market? I think so. But it won't just be because of the halving, especially because the halving is so much smaller now than it was. In short, let's talk about some of these different factors and bring them all together into one cohesive thesis. First and foremost, FedNow coming out is potentially a detractor from this bull market. It's potentially a way that people would choose to not invest in Bitcoin, because why would they? When they can invest in a bank or in a credit card company that uses FedNow. That is a potential detractor to the Bitcoin and cryptocurrency market. I don't think it's going to be as big as people think, because there's a lot more to Bitcoin and cryptocurrency than just low transaction fees. I don't think the point of digital currencies is just low transaction fees. That's not the only purpose. That is the purpose of a lot of fintech, but that's not the only purpose. All right, moving on. We're going to see the M2 money supply continue to grow. It started to grow again. It's going to continue to grow to make up for all of the lack of growth over the last 2 years. That is a pattern that we've seen throughout history be 100% accurate. When M2 growth is high, so is Bitcoin. Furthermore, CPI is going to probably go up again to 3.5 to 4%. In doing so, that's going to spook the average American. And in light of better economic conditions other than increasing CPI, people are going to say, I have more money in my pocket that is disposable that I'm willing to invest. So I'm going to put some money into what everybody is saying is the hedge against the United States dollar. Bitcoin still has the narrative on that. Believe it or not, Bitcoin still has the narrative that it is the hedge against the United States dollar, even though it's massively dropped, especially if it goes up above $35,000, $40,000, and people say, okay, it's in spitting distance within all-time high. I might as well get in now so I can make an easy 50% on my money over the next 18 months. With economic conditions improving and people not being scared that they're going to go bankrupt in the next 2 months, they have some more freedom in their spirit to invest in something that they're not as sure as. They're going to be more risk tolerant, which is what you need to invest in Bitcoin. If you're the average American, you have no idea what it is, and you don't have the time to look into it, and it's not your passion or your hobby like it is for us, and our career like it is for us. That, in correspondence with increasing CPI, is going to drive people away from the dollar, again, probably causing the Dixie to drop, which inversely is correlated to the Bitcoin market, and if the Dixie goes down, that means Bitcoin goes up, And if Dixie's going down and Bitcoin is going up already, and then you introduce the fact that inflation is higher, because that's how that happened in the first place, and people are more skeptical of the dollar because they're thinking, man, I don't want to lose 4% on my money every single year. You know, you've seen all the memes of, like, I saw, my wife showed me a meme the other day. You know, you've got this lady in 1980 is a stay-at-home mom with her $20 of groceries going home to her $18,000 house, and the shopping cart's completely full. It's like in 1980, right? People are sick and tired of $100 not getting them through the week on groceries anymore. It's not going to change. They can't fix it, but what they can do is they can invest in an inflation-hardened asset like Bitcoin. So especially when economic outlook is looking better, and but the main thing that they're concerned about is inflation, that is the limelight opportunity for Bitcoin. So all of that, including the halving, is why I think the start of the next Bitcoin bull market is around the corner. I think it is going to be in the next 8 months or so. Many people are already predicting that, but time is going to tell exactly how that plays out. I think you're going to see a bull market start on Bitcoin in the next 6 to 8 months, but I think what we're going through right now may be one of the biggest drops that Bitcoin has seen so far and will see before the halving begins. Alex said the vid was the best thing to happen to capital markets since the dot-com bubble. Without that money printing, we wouldn't have had the bull market we had in 2020 and 2021. That's true. However, what I will say is that all that money printing caused a little bit of a bubble on Bitcoin. The growth to $69,000 was somewhat propped up by that printing. Yes, we went to 69,000, but look at how much harder it is to get back to 69,000 now, because it rallied there in due in large part to a geopolitical and global health crisis. Bitcoin will, and probably did, go to $69,000 on its own merit, but it didn't exactly get there in the healthiest of ways. It got there because of all of that printing. And so it's a little bit like saying, you know what, look at me. I finally hit 315 on bench. But I did it because I was taking steroids, right? That, you know, I'm not saying I did that. I definitely can't bench 315. I'm not touching steroids for any reason. I have a difficult enough time trying to get through the idea of coffee because caffeine is a psychoactive drug. But you know what's funny? Caffeine, and I drink coffee every once in a while. Don't get me wrong, especially on the trip when we were, you know, on vacation. But it's a psychoactive drug. You guys realize that it is a pesticide actually that the cacao plant uses to stop bugs from eating it. I'm not sure how that works, but what I can tell you is that it would be very funny for me to see what happens if a bug eats. What is it? The cacao plant, I think, right? I don't know enough about coffee. If a bug eats it and it gets the caffeine in it and it just turns into a a jitterbug and just like explodes. Like it's literally a pesticide. You guys can look it up. Caffeine, nature's pesticide. Leave it to the leave it to humans to consume a pesticide every single day. Caffeine is found in seeds, leaves, fruit, and certain plants. Have you ever wondered why caffeine exists in coffee seeds and tea leaves? Studies that caffeine is a natural pesticide. It gives off a bitter. Okay, this is definitely not written in English, even though it's on EnglishClub.com. It gives off a bitter to ward off or kill insects that come and feed on it. So funny. Anyway, the reason I brought up coffee is because like I said, the reason that Bitcoin grew so far in 2020 and 2021 was because it was on steroids. It was on steroids. You want to see the steroids? I got the chart for you. It's right here. It's ridiculous M2 growth. 20%. 20%. No wonder a year later we were looking at 10% inflation. M2 money growth and inflation are not the same thing, but a lot of times M2 money growth will eventually turn into inflation. So, where do we go from here? The fact of the matter is, Bitcoin is getting into a better position all the time. Bitcoin will probably get a spot Bitcoin ETF its spot ETF in the next 2 years, and I wouldn't be surprised if Ethereum was right there with it. Wouldn't it be funny if Ethereum got its ETF first? I kind of doubt it, but it would be pretty funny. I do believe that Bitcoin is going to go through a major bull market, and when it does that, you're going to see millions of people and billions, if not trillions of dollars, probably trillions of dollars, flow into the cryptocurrency space. People want to argue about whether or not Bitcoin has real value, but what I will say is that it's not an argument anymore. It may have been an argument 10 years ago when it was worth a couple $1 billion, but you cannot argue at this point that it has something that people care about. There is something about Bitcoin, and we can sit here and talk all day about what it is, whether it's superconductivity, its immutability, its transparency, its revolutionary blockchain technology, its digital scarcity and validation, ability to be validated of ownership online. It's thermodynamic soundness, meaning that it doesn't inflate or loses value over time. Whatever it is, whatever you want to say is the number one value prop of Bitcoin, what I can guarantee you is that it is valuable to someone because it is still worth $500 billion. The argument about whether or not Bitcoin has real value is a moot argument at this point. And anyone who wants to make that argument, I think, is missing the point. You could argue about whether or not it's a good investment vehicle. You could argue about whether or not it is something that you should invest in. What you cannot argue is that it does have value. It has $510 billion worth of value right now. For some reason, we can talk all day about what the reason is, but for some reason, people have chosen to keep hundreds of billions of dollars of their wealth in Bitcoin. And for that reason, Bitcoin has value. Why does it have value? It's a little bit like why the Kardashians are famous. At this point, part of the reason that Bitcoin is valuable is because it's valuable. And isn't that the same value proposition for gold? Isn't the same value proposition for gold is that it's valuable because it's valuable? At the core, you can go deeper than that, I suppose, and say, oh, it's scarce, but you can say the same thing about Bitcoin. If you say that Bitcoin has no value, then you must also say that gold has no value as an investment vehicle. Of course, gold has use cases in industry. But Bitcoin has use cases in finance. So let's not play apples to oranges here. Bitcoin has value. We know that. And if Bitcoin can provide, a little bit like this channel, if I can provide value to 100 of you guys, I can probably provide value to 1,000 of you guys. It scales because it's on the internet. Bitcoin has provided value to the holders of $510 billion worth of value in Bitcoin, and it can provide a whole lot more. So as the PR around it changes, as the landscape around it changes. The interesting thing about Bitcoin that is different from every other investment vehicle and investment class that you'll ever buy into, the only thing that's different is that Bitcoin doesn't really change. A company grows. It gets a different CEO. It gets a new board of directors. It gets a new chairman of the board. People die. People come into play. Whatever. Bitcoin doesn't change. The market around it changes. So it grows a little bit like a weed. It's the same thing. And once you introduce it somewhere, like a colony of fire ants, it takes over because it is not the one that is changing. Its environment is the one that is changing. And if you introduce it somewhere, it's like a swarm of army ants. It will conquer everything around it because it doesn't change. And its principles and its properties are so powerful that if you put it in the right place, it's going to win. So that's what we're going to see happen in the next bull market. Y2K OG donated $5. Thank you so much, my friend. Said, good morning, y'all. Jeb, thoughts about the recent FASB fair accounting rule that just took effect as it relates to crypto and how bullish that could be? All right. Let me find some information really quickly on that for you because that has just been looked into. Let's see. Got right here. Now, actually, WSJ has an article on this. Yes. So this is a pretty important development because one of the things that is stifling cryptocurrency adoption is that we need to see how well or how companies are going to actually be taxed and how they're going to be accounted for. So Wall Street Journal has an interesting article over here on this that I thought was useful. FASB adopts crypto accounting and disclosure rule for companies. The new standard requires businesses holding crypto to recognize losses and gains immediately, a change for which they had rallied. Part of the reason that that's useful is because Bitcoin and cryptocurrency tax accounting is such a freaking nightmare, especially if you're trying to set up trading in it. If you work at Fidelity or if you work at Vanguard or if you work at anywhere that would be potentially interested in trading Bitcoin and cryptocurrencies, it is a hellscape of trying to report those transactions, and there's no way for companies to be able to integrate all of that accounting and all of that reporting together in one seamless way, because there's not been very clear regulation. I think that this news is a win for regulatory clarity. I think it's also a win for industry-wide framework for how the accounting practices are going to be done. The FASB voted on it to set a new rule on a cryptocurrency accounting and disclosure, changes companies holding these assets have argued more accurately reflects their financial condition. There's no specific accounting or disclosure rules for crypto assets in the U.S. Businesses now classify crypto assets as indefinite-lived intangible assets similar to intellectual property such as copyrights. Companies have to review the value of such assets at least once a year and write it down if it drops below the purchase price. If the value were to rise, companies can record a gain only when they sell the asset, not if they continue holding it. The FASB, which sets accounting standards for the U.S. public and private companies and nonprofits, on Wednesday voted unanimously to adopt a new standard that would require businesses to use fair value accounting for Bitcoin and certain other crypto assets. Companies and accountants have repeatedly rallied for this change, as it would allow for them to recognize losses and gains immediately and treat digital assets as they would some financial assets instead of indefinite-lived tangible assets. As I said, it's a pretty big deal because it ends up putting Bitcoin and cryptocurrencies on a similar par to stocks and other commodities that you can purchase instead of, as they talked about, indefinite-lived tangible assets such as copyright. So I think it's a big win. I think it is a very big win. I think it is a win for regulatory clarity. I think it's a win for accounting, and these are the kind of things that are not sexy. They're not exciting to most people. To some people they are, but accounting practices are actually very important because getting those details figured out is substantial for businesses that are trying to succeed in working in the cryptocurrency market, because they need to be able to have a framework to work in so that it's actually profitable to be a member of the cryptocurrency space. All of these different regulatory gains add up to massively streamlining how companies in the United States can interact with the cryptocurrency market as well as individuals. And so it is going to make things a lot easier for adoption for Bitcoin. Great question. I'm pretty excited about that news. All right. Let's go ahead and read chat for just a minute, and then we're going to wrap it out. Thank you guys so much. Ninja Glock says he did say in an X space that he owns 67% of the company. Interesting. Yeah, I have no idea how much of the company Ben owns. No idea. That would be a very interesting piece of information to come out. That would be a very interesting piece of information to come out. All right. As I said, really appreciate all of you guys for tuning in. Definitely thank you guys so much for tuning in. Any final questions, go ahead and let me know. Would love to hear them. I'm going to see if there's anything else that I want to mention really quick. There's obviously a lot more that we could talk about, but for now, I think that we pretty much made our point. Just kind of recap. Make sure you guys know what we're talking about. The M2 money supply is starting to grow again because we are... That was from Ben himself, right? Yeah, I'd love to hear that. Do you have a link to that? Like I said, I understand what you're saying is that he's the one that said that. I'd love to see something in writing, or as far as if there's a recording of that spaces. That'd be interesting to hear. I'm not saying I don't believe you. Just, it's good to look at hard evidence. Nothing against you, Ninja Glock. Like I said, I want to kind of look at that through almost a quartz lens. But again, the M2 money supply is going to start to grow right around the time of the halving as a result of economic conditions picking back up. Yes, we're going to see some inflation, but the Fed is willing to start going on its regular business of printing money and trying to expand the money supply by about 2 to 3% every single year now. That is going to lead to a large rally on Bitcoin because frankly, it always has, and it also makes sense. If you have more money in the economy, then people have more disposable income, and they're willing to invest more of it in riskier assets. Bitcoin being one of them. It also oftentimes leads to a massive rally on the stock market, and if you have a massive rally on the stock market, then you end up having Bitcoin rally as well, because it's treated almost like a tech stock by many traders. It ends up going in the same direction as the tech stocks, especially even as far as the market itself, as the S&P. So pretty excited about where things are going. I think that we're going to see a bull market come, and I'm excited to share it with you. Guys, that is going to wrap it out for today's video. Make sure also to sign up for Lux and Algo if you haven't already. Really encourage you to do that. As I said, I'm going to go, but before I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.